welcome back, and buckle up for the most boring channel on YouTube, as always, the Junius Maltby channel, for the dedicated few that come here and hang out and join the conversation. Thanks for coming back. A little tired today from working yesterday and everything, so but I'm pretty fired up to make this video. Actually just got done about an hour ago with a conversation with a close family member on some of the topics we're going to hit right now. What the heck's going on? I know you're all wondering that. Hopefully you are out there educating yourselves, reading, and watching some of the experts, not basing anything you learn or talk about here on your decisions, but just going out there and kind of investigating on your own. Some interesting things happening. Let's talk about ETFs, exchange-traded funds, and paper gold. If you have not seen it, please go back and watch my paper gold and why not to buy paper gold video. But, wow. So, apparently, something like 99% of the gold that was sold during the last week, especially the 2 days where we saw the big drops, was not even physically held. Like, it didn't move around or anywhere. It was just paper. Gold on paper and digits on a screen. Someone said they owned it because they bought it and it's on a computer and they executed a trade. And these were exchange-traded funds, as we all know. Not going to go into a whole lot of detail on what they are, but that's pretty much what it sounds like happened. And a lot of the experts agree that the fact that exchange ETFs and the SPDR, the SPDR, since their inception back in, what was it, 2008, we've seen some pretty volatile movements as far as when sell-offs like this take place. It's very, it's very easy for people to just kind of buy and sell gold on a computer, never take physical possession of it. It's just interesting. And there is always that question of, did they actually own it? Do these funds that have and say they have X amount of gold, do they really hold X amount of gold? How good is the SEC at tracking these companies that are buying and selling and supposedly holding gold? Could there be a Bernie Madoff out there in the gold world, in the ETF world, that sells gold to one person and then sells the same coin to another? Because remember the image we drew where you've got that gold in a room with four sides, and there's a window on each side, and people are looking in, and the guy that sells them that piece of gold tells every single person looking at it that's theirs. So you got a guy over here looking at it, a guy over here looking at it, and a guy over here looking at it, and a guy over here, and they all think it's theirs. Well, who does it belong to? They're all looking at the same piece. Well, I just wanted to bring up another point. I'm not going to go in there into too much detail about defending gold's position and its role in 65 centuries worth of economics, about holding value and its purchase power, etc. I don't have to. Its reputation, its chart, its purchase power speaks for itself. The fact that this was once $20 worth of gold, $20.67 worth, and that ever since it was re-legalized in 1974, it has gone up pretty much and held purchase power since then. So I don't need to sit here and tell you why that's a good thing. What I do want to talk about is those that are scoffing and laughing and pointing fingers at the, well, let's call us gold bugs. I guess you could say we did the same to them back in 08 and 09 a little bit. I was there. I was one of the laughers at the people that were losing their shorts in the markets. And I guess it's our turn a little bit to feel what that's like. However, I think we can also be confident in our position. But let's look at their track record a little bit. I got some charts here. Okay. Now, first let's look at the gold chart. That's a 10-year gold chart. That's from April of 2003 to April of 2013. Okay. Pretty good climb. You can see a couple of dips there. Everyone remembers the 08 dip a little bit. We have the peak there right in mid 2011 in the summer, and it dropped off from that peak a little bit, and then it went back up to, about the 1800 mark, where it's met some resistance and come down again, and now we're just below 1400, but it's still considerably higher than way back here. Now that's overall. If that was a stock or anything else, people would say, "Wow, that's a healthy chart." If that was Apple, if that was Samsung, if that was Toyota, if that was Microsoft, that would look okay to some people. They'd go, "Oh yeah, It's down here, but it'll probably most likely tick back up as it moves along. It's just people are taking some profits off the table. We've talked about reasons why gold dips in May, also why some banks are selling, and now we know a lot of electronic trades have taken place to further drive that sell down. And for those of you that might subscribe to some of the conspiracy theorists out there, I'm not taking anything off the table. Could there be some movement by the Fed to take the faith and the steam out of gold, to kind of bruise its image, when you have states like Texas and Arizona looking to have gold and silver as legal tender in their states, when you have as much attention being paid to it on the international level as a safety and a hedge, as an escape from this, the toxic green currency, the US dollar. In order to strengthen this, they got to beat this down a little bit. When the dollar rises, gold dips. It was getting a lot of attention. As Max Kaiser so poetically put it, gold is kind of like analog Bitcoin. It's got a fixed amount. There's only so much of it, really. The supply expands slowly. And it's very difficult for governments to control the utility of this currency, of this money. And the way it moves around privately for sales and trade. But let's move on a little bit here. I kind of getting sidetracked. Got too many thoughts going on at one time. So here's a Dow chart, 10-year Dow. All right. Remember this? Boom, boom, boom. People talking about Dow 36,000. It could only go higher. It was stupid not to have a mortgage or several mortgages. This is when people were flipping houses. You got to get real estate. You got to buy stocks. Got to buy stocks. Bank stocks. Remember all the advice you got from the supposed experts. Everyone was saying that stocks like Lehman Brothers, Merrill Lynch, these were the untouchables. Bear Stearns. Wasn't it the day before Bear Stearns absolutely crapped out down both legs that Cramer was telling everyone to buy it and it couldn't go anywhere? Same with Merrill Lynch. I like the old saying that Jon Stewart had. With Jim Cramer, I could have made $1 million. I could have had $1 million if provided I had started with $100 million. Because people lost their shorts, as you can see here. Now, you look at that compared to the gold chart, that's a little bit different. Okay? The Dow Jones Industrial and the S&P 500 and the NASDAQ, which you see here, lost 10 years. They lost 10 years worth of gains in almost a year. And everyone was, they were panicking a little bit, but they all said, "Oh, it's fine. This is normal. Oh God, it's going to come back." And they had excuses. They had their excuses. And 10 years of losses, wealth wiped out, whole pensions, savings, retirements. America's wealth was siphoned off. And of course, we paid off the scoundrels that did it. We gave them bailouts and bonuses. But when you look at these crashes here and here, and you look at here, look at that. That's the S&P right there. Look at that. Look at that drop. And it's going to do it again. We all know it. Everyone who's here knows this is coming again. The only reason these things went back up is because of $85 billion a month. QE1, QE2, QE3, QE Infinity, bailout, TARP, massive stimulus, zero interest rates. That's the only reason this chart went from here to here, is artificial. Completely they're pumping it. I'm not buying stocks. You're most likely not buying these stocks. The fact is, when this drops from here again and you zoom out from this chart in the future and you see this going down to here, below this even, that's when reality's going to set in. Hindsight's 20/20, people. But the fact of the matter is, you look at gold chart next to that, this is nothing. Going from 18 to 14. Come on now. In order to lose 10 years of losses, gold would have to go back down to 200. Does anyone really think, let me tell you, if gold goes to $200 an ounce, I'm cutting both my kidneys out, going on dialysis, and selling my kidneys on the black market to buy more gold. If gold goes to $200 an ounce. Anyone who think if gold goes to 200 and you don't sell everything you have to buy it, well, I don't want to insult anybody, but you'd be silly. especially with the amount of stimulus and inflation that's going on right now. Now here's a 10-year dollar chart. Okay? It's not upside down. Believe me, that's what it looks like. Where's the overall trajectory of that going? You see that? That's the dollar chart. That's the strength of the United States dollar right now. Okay? It looks like it's just kind of crippling its way downward. As everyone said, the dollar, the yen, the euro, it's a race to the bottom. They're just printing off their currencies and see who can get to the bottom first. The dollar's the leper with the most fingers left. It's garbage. Really? What is this backed by? What is it? What is it? What is all this? What's the difference between these and this? Huh? The color? The digits? The country they come from? The bank that promises payment? Some gentleman on the channel really liked this one. Little Malaysian note. You know, look at this stuff. It's paper. You have rupees and yen and won and dollars. And there's gold. It's not going anywhere. I just want to encourage all of you out there, those of you buying, that are stacking, that are keeping it. You know, economics is like religion. Every once in a while you gotta just, you gotta have that faith. Because believe me, this takes faith. That takes faith. To believe that this is going to buy you anything takes faith. It takes a whole nation of faith. The credit, the debt, the banks, the way it all works. They make it sound so complicated. Oh, first the Fed has to monetize, and then it loans money to the Treasury and buys treasuries. Then those treasuries we print them off and build, and then they create this huge, complicated. It's like mint some coins, issue them, and let the free market take care of the coins and the currency itself. I mean, is it any wonder from 1913, right after 1913, we had the 1929 stock crash, the Great Depression. We had the recessions of the 50s, the 70s, the crash of 87, the crash of 99, the crash of 2007. The Fed was supposed to stabilize everything. We'd never have a bank run or a crash again. And ever since the inception of the Fed, the dollar's lost 98% of its value. This is worth, what is the purchasing power of this right now? Is it 4 cents? 4 zinc-plated, or copper-plated zinc pennies. That's the real purchasing power to this compared to when the Fed was first invented, or first born. Because we all know, prior to the Fed, or even right after, the silver dollar still existed. But prior to those, this was a dollar. As you all know, you've seen this coin before in the many videos. The one I carry in my wallet to remind me of what real money really is. They can never take this from us. If I was going to give you one of these, which one would you rather have? If I'm going to hand you one of these, which one do you want? Both of them are $1. Both of these are called $1. Which one do you want? You want this one? You can go buy a small fry at McDonald's with that. You want this one? $28. Might be able to buy a pair of jeans, a steak dinner, and a beer. You want the fry? Who wants the small fry at McDonald's, and who wants a steak dinner and a beer? I guess that's the ultimate question. Steak dinner and a beer, small fry at McDonald's. Because that's the difference between these two. This is real, this is fake crap. This is unhealthy, this is healthy. Fact of the matter is, let the charts speak for themselves. Let the history speak for itself. But again, also, you can also say, forget the history because we're in uncharted waters. As Professor Anatol Fouquet said a couple of years ago. He also spoke about the time of the vulture, where gold would pretty much, there'd be voracious selling and huge swings. No one really knows what's going to happen. Ben Bernanke. Remember what Ben Bernanke said just prior to the major collapses you see here. Remember, the housing is sound. Everything's okay, pretty much. And then look what happened immediately. The very experts, you have to understand something, the very people that we all see on television right now, the very guys with spectacles and glasses and beards that are writing articles and white papers that have never held a real job in their lives, the guys with the suits and ties that are looking into the TV and talking to people on CNBC, the guys writing articles on MarketWatch and Smart Money. A lot of these experts, or supposed so-called experts, just prior to these major collapses in the stocks and the bonds and the mutual fund markets, the housing markets, they had no idea. They couldn't have been more wrong with what was going to happen. They couldn't. There was no more wrong to be. They were as wrong as it got. And Peter Schiff nailed it. We all know that. Peter Schiff was right. Peter Schiff was right. He called this stuff years before that, and they laughed at him. Watch them laughing at him. Go Google or YouTube the video. Peter Schiff was right, 2006 to 2009. Sure, everyone is off some days and wrong a little bit, but Peter Schiff's right more than most, and he's wrong less than most. And I'll tell you what, the people that listened to Peter Schiff saved a heck of a lot of their wealth, and the people that didn't lost a lot. So for those of you out there that come to the channel to troll and to hate and to scoff at the stackers, the guys that got gold and silver, go for it. That's fine. It'll all unfold as it should. We'll see in the end. We'll see 10, 20 years from now. We'll see where we're at. We'll see who has what. But in the end, none of this is even, as you know, if you want to get real philosophical, it's not even important. It's just money. It's just wealth. It's just material things, possessions. What's real important, ultimately, is who you are as a person and what's inside. But that's an entirely different video and topic. We don't need to go there. We're talking about this right now. And I'm just trying to offer some bitter words of encouragement. Honestly, I look at the fundamentals. I'm looking at what's going on. I'm looking at who's controlling it. And when you have $85 billion a month being pumped into the system by the Fed, buying treasuries, when you have massive stimulus, when you have zero interest rates, destroying and eroding the dollar, destroying people's savings, when you have a debt of a country at $16 trillion, projected to be over $25 trillion by the end of this president's term, with over $100 trillion in outstanding liabilities when you include all the entitlements in Medicare, Medicaid, Social Security. When you look at numbers that are measured in quadrillions of the entire derivative market of the world economy that could be vacuumed and sucked away when this whole thing pops again. When you look at the fact that there's a risk of 2/3 of America losing all of their wealth and savings when this thing goes south again. And when you look at all the fundamentals, how nothing has really changed, and that they're leveraging again, and that housing prices are going up again in ways that are unhealthy and unsound. When you look at the unemployment rate sitting at 8% and barely inching down. And the only reason it does go down is because they drop people off the rolls of unemployment because they've been unemployed for so long. How sick is that? They don't count them because they've been unemployed for 6 months or more. Or whatever that number is that they use. Where the discouraged worker, they call it. Those that have been seeking employment but cannot find it, and so they don't count them anymore. Real unemployment is known to be higher than 8%. The economy is sick. I'm not being a pessimist, I'm being real. It's reality. The economy is not doing better. Is that treason to speak that? Do we have to be blissfully optimistic but ignorant of reality and facts and real data? The fact is, it's not healthy. It's not getting better, and it's going to get worse. You can laugh, but come back to this in 5 years and tell me how it is. Tell me if you're really doing better. If you're watching this in YouTube Future, and it's the year 2018, leave a comment. Tell me how you're doing. If you're making more money than you were in 2013. Because what is credit? Credit is the hedge, the bet, that the future will be more productive than the present. And so you're betting on the future. Well, no one really knows the future. So don't go into debt. Don't have any debt. And save your money. Pull it in. Batten down the hatches. It's the eye of the hurricane. And you know what? What do you do when a storm's coming? Do you wait for it to start raining and pouring before you roll your windows up? No. Roll your windows up, slow down, look around, and buckle up. Because you know what? These charts, it's going to happen again. Fundamentals are there. Everything's the same. No one's woke up yet. They haven't healed the system. The corruption and the immorality that takes place at the highest levels of these corporations and Wall Street are still there. The same crooks, the same gangsters, the same banksters, the same criminals, the same thugs. They're still in charge. They're still wearing their suits, getting $600 million a year in bonuses. They're still paying off politicians. They're still getting tips. The Fed still gives them their minutes a day early so they can do some insider trading and be protected by it. Making bets before anyone else while you're sleeping. Remember, it's a rigged game, and the house never loses in this casino. They don't lose, and they're not there to get you rich. They don't care about you. They don't care about me. To them, we're just a means to an end. We're peasants. We till the fields. We grow the food for them to eat it. And we work so they can tax it. And we buy their products and give them our money and our labor and our sweat. Alright? Hey, and I'm happy with it. I don't mind. I'm not ashamed of my calluses. I don't mind working. That's what I do. That's what you do. That's what I do. We're the only people that, if we stopped working, the whole thing would stop. We got to keep working because those guys don't work. These little fancy shoe boys, their suits and their ties, their nice cars. Hey, good for them. Good for them. But hey, keep up what you're doing. Keep your chin up. Don't let the naysayers and the haters get you down. You will be vindicated. Trust me. Well, you don't have to trust me, but you ever get down, just go look at your 10-year chart. And just remember, it's probably a good time to get some. I know I am. I was actually supposed to get another half this week, but I don't know if that's going to happen right away. It might be next week. But hopefully pretty soon I can show you another quarter or another half here real soon. Alright, that's a long video. I'm watching the clock tick down. I was going to give you at least a 29-minute video today because I had a lot of steam to blow off, but probably missed something I was going to talk about. You know, go out there, go read Peter Schiff's article from the other day. Look him up. Just look up everything he wrote in the last week. You'll find it. Max Kaiser had a pretty good episode 432. Talked a lot about Bitcoin. We already discussed that here. I like it for the challenge it is to the system. I'm going to root for it. Go Bitcoin, bring it down, break it down. Give people an alternative to using the banks. Threaten the banks. Threaten Visa. Threaten Citibank. Threaten Wells Fargo. Be a threat. I enjoy it. I like watching it. Take them out. It's funny. Watch them scramble. They're probably panicking. Guaranteed they're in full hack mode trying to bring it down. Somebody is. They do not like it. It's obvious. Just look at what they accuse it of. Every day now in the media. Bitcoin. It's being used for arms trafficking and drugs and prostitution. Really? Has that been validated somewhere? Is that really what people are doing? Because the last time I checked, it was a bunch of computer guys that were buying, their cool stuff that they like to buy on the internet. And it was people in Cyprus that were getting shanked and robbed who were dumping their money into it to prevent themselves from being shanked and robbed. So I don't know how many people were buying heroin with their Bitcoin. I would like to meet those people. What do they do? They get on eBay or somewhere? Whatever. It's just amazing how they tarnish something. They have to go after its reputation immediately. They attack it in order to bring it down. So, alright. That's it for today. I think I blew off a little bit of steam. It was good. Good little vent session. Thanks for letting me lay on your couch. And, alright. Well, hope that wasn't a Probably broke the record for boringness on the Junius Maltby channel. But again, thanks for joining us on this episode. Feel free to leave a comment. Neo, I know you will. And then all of you guys with the name Silver in your name, I know you're going to leave a good comment. And the guy from Australia, or two, thanks. Appreciate your comments. A couple of you from Canada, as always, thanks for stopping by. Appreciate you, my brothers to the north. And appreciate all of you spending time here and participating in the Junius Maltby project, channel, thing, system, show, whatever we call it. All right. Well, I'm tired. I'm going to go drink a beer and chill out for the rest of the night. And I'm not going to read any news because I just don't want to. All right. All righty. Have a good one. Take care. Subscribe.